Are you thinking about buying a condo in the greater Chicago market or frankly anywhere in the country? When you buy a condo, did you know that not only is there an approval on you and your credit and your income and your assets, and there is of course an appraisal on the property, so there's an evaluation of the appraisal. There is also an approval of the condominium building itself. So it's actually a three-part type of approval when you're buying a condo. There are some basic yet critically important questions that you should have answered before you sign that purchase agreement. Let's start with one of the most basics. How many units are in the condominium, and how many of those units are owned by investors? So obviously if you have a property that is 60 or 70% investor owned, you're going to get a lot of people in that building that are either just renting there or perhaps a VRBO, Airbnb, etc. And that may not be great for value. It may not even be great for you enjoying your condo if there's a lot of people there in and out every week or short-term rentals, etc. So it could also impact your ability to get a loan. So make sure you understand the investor concentration in a condominium. Also, there's a lot about safety, soundness, structural integrity, and habitability. So did the last inspection from the city of Chicago or any type of professional inspection company, did that reveal any issues with safety, soundness, structural integrity, habitability? Obviously, Fannie and Freddie have been hyper aware of this issue ever since the tragic condo collapse in Surfside, Florida. And while they're not engineers, and certainly neither are lenders, they are doing their best to make sure that condominiums that people are buying don't have these types of issues with them, as revealed through the condominium minutes or through the last inspection. Another critically important question: are there special assessments that are either currently being paid or pending? So number one, there's financial consequences to you, the potential buyer. How much are you going to have to pay for these special assessments? How much are there, or are there potential special assessments that are coming? So in addition to the big financial impact, you want to know what that special assessment is for. Is it just to have the building re-roofed or tuck pointed, part of common maintenance, or is it something to fix a safety issue, say with the balconies? We have seen issues where balconies are separating from the condominium or from the structure itself, and obviously that is a big concern. So make sure you ask about special assessments when you're evaluating the building. From a financial perspective, does the building have sufficient reserves for its deferred maintenance, for future improvements? Obviously, you want to see a building, and the bigger the building, the more reserves you want to see. Do they have sufficient reserves for those projects that might be coming up? And this is a Fannie Mae requirement, do they contribute 10% of the HOA dues, the HOA revenue? Do they contribute 10% of that amount monthly to their reserves? So as an example, say you have a 10-unit condominium building and each unit pays $600 per month. So $6,000 a month times 12 months, $72,000. That condominium that HOA has to contribute 10% of that, or $7,200 each and every year, to their reserve fund. Again, that's to ensure they have sufficient money to fix things that get broken down the road. And every condominium is going to have issues. So it's not whether or not they have issues, it's whether or not they're being addressed on a regular, ongoing basis. Litigation. Is the HOA involved in any type of litigation? This is also something that, while it's technically against Fannie Mae guidelines, there are ways to still approve the condominium if there is litigation. Certain types of litigation may be considered acceptable. Other types may be not acceptable at all. So a slip and fall. So somebody slipped on the property and they're suing because they broke their wrist or something like that. Usually that type of litigation will be acceptable if we get sufficient commentary and backup documentation from the attorneys. What the maximum liability is, will their insurance policy cover it, etc. On the flip side, If it's like litigation from the city or local municipality due to a safety issue, going back to those balconies, that's going to be a big issue, and that will typically not be acceptable to Fannie Mae, to Freddie Mac, to most lenders until that work is complete, and possibly until the litigation is completely resolved. They'll definitely want to see that the work is complete. Another basic one, but critically important, how many unit owners are delinquent on their HOA dues? So if you have a big building, 60 units, 50 units, and only 2 are delinquent, probably not a big deal. If you have a smaller building, 10 units, and 4 or 5 are delinquent, that is a big deal. So as unit owners become more delinquent on their property, it's obviously a sign of financial stress, which could impact the value of their property and perhaps even lead to increased HOA dues for the remaining unit owners that they'll have to pay for these improvements that the other people are not able to pay. So also a critical one to make sure you understand going into it. And then, is there commercial space in the building? Fannie Mae has a requirement where there cannot be more than 35% of the total building square footage used for commercial space. So, we've seen this, obviously coffee shops and restaurants on the first floor, and they're all part of the Master Condominium Association. That's totally fine as long as it's less than 35%. So a lot to evaluate on a condominium, and there's even a lot more to ask in addition to that. All of these answers become very clear once your lender gets the condo questionnaire filled out, which they also charge you like $400 to $500 for that. But that's another story for another day. But we do think it's really important to have some of those basic questions answered before you sign the contract, and really talk to a lender that is hyper local to the area, that knows the market, and of course, critically important to work with a real estate agent that's also extremely local, knows the market, knows the different condominiums and what issues there might be with some of them. When in doubt, please reach out to United Home Loans. We are happy to help.